we will certainly try, but a lot of the macro geopolitical factors are beyond our own control. But as far as the exchange is concerned, we have good fundamentals. We have started our 3-year strategy last year, China anchored, globally connected, and technology enabled. And we are definitely following that and bringing it out step by step, our strategy. So the outlook is we feel that we could be cautiously optimistic, but as you say, there are headwinds, there are things that are beyond our control.
There were two major names that listed in 2019.
Right.
Budweiser, Alibaba.
Right.
As we look to 2020, what are we going to see in terms of big, high-profile listings? Could we expect an Ant Financial maybe, or a JD, Baidu, secondary listing moving to Hong Kong?
You know that I can't talk about individual listing, but we do have a healthy pipeline, different names and different sizes. We did our listing reform 2 years ago, and last year was the first year where we really saw that it has grown quite well. One is, of course, the weighted voting rights, and for that we have the Xiaomi and of course Alibaba. The other success are the pre-revenue biotech companies. And it was also a part of our major reform, and we are now the second largest in the world in that area of the industry. So we're very pleased with the success of our reform, and we look forward to having more companies of that type come to our market.
Too early to confirm that the listings are going to take place, I know, but can you confirm that you've actually spoken with Ant Financial,
we cannot
JD.com, Baidu, NetEase,
we cannot
C-Trip?
Yeah.
Could you confirm any of these names?
I cannot confirm any of the names because our rules require that the executive board, there is a Chinese wall. So that is on the transaction side, and we do not deal with transaction, and we do not know about it, and we do not talk about it, obviously, until it happens. Yeah.
There has been a suggestion that some Chinese companies listed in the US would come to Hong Kong for a secondary listing as a way of sending a political message to the US and US exchanges that because of the way the trade negotiations went, there is a movement to pull business back to China. Do you think that's true?
Well, I think there are many factors drawing companies that are already listed anywhere else to consider another market. I think if we look at the US listed Chinese company, certainly they are under a lot more scrutiny, and the companies themselves perhaps are thinking of having a plan B. So, and then of course if you see the success of some of your fellow companies, that might give you ideas. So I don't know, I think different companies are motivated by different factors, and the trade tension has to be one of them.
The phase one negotiation completed, deal signed, and yet it took all of the year effectively. Can I ask you, do you feel that it had any impact on the listing pipeline for you, and could you perhaps help us understand whether trying to get to phase two will have any consequences for the exchange?
I think, the exchange, particularly on the listing market, we face all kinds of challenges. The geopolitical, the last year obviously was the US-China trade tension, but in other years, financial crisis in the West affect us. So there are many factors that affect us, and our theme has always been we have to do a good job ourselves. We have to make our market attractive. Our fundamentals have to be good. We have to give people the confidence to come to our market, and that's why our rules are robust. We're continuous to look out for area where there's a niche, that there is a need for capital raising, and the big factors, the macro factors out there, we just have to deal with it as they come.
So the impact, it sounds, has been limited.
So far it has been, but I would have to say that one never knows.
given the phase 2 is about issues around market access to China and mainland support for exporters, do you think it's going to be a lot harder to get a trade deal done on phase 2 than phase 1?
I don't know, because I think when phase 1 started, no one expected it to be so prolonged, right? There were periods where we thought there was going to be a deal. So it's anybody's guess whether this will be very swift or very prolonged again, and what kind of impact it will have. It really, I feel that it's hard to predict these days.
Your CEO has, in recent days, talked about economic devastation for Hong Kong from the ongoing protests.
Right.
The exchange actually did remarkably well in 2019 in spite of 7 to 8 months of protests.
Yes.
What do you think the impact will be in 2020?
Well, I think we did well because of various factors. Well, our daily turnover, our trading volume did take a hit, and thankfully it has come back quite nicely in the last month. We hope that it will continue. And the impact that we are concerned with are really the volume, the trading volume. When the investor confidence is less friendly, or rather they would look for other alternative markets, then the volume goes away, and that is our concern. But so far, we have been able to keep the investors interested in us, attracted to our market by really the quality of our market and, of course, the various listings that you have mentioned.
This is the biggest delegation to the World Economic Forum since C.H. Tung, I think, almost 20 years. Are you pleased that finally it seems the Hong Kong government is getting on the front foot? Because to a lot of international observers, it's been behind this story all the way along.
Yes. I think as far as the World Economic Forum is concerned, you are correct that since C.H. Tung's time, there was a period of inactivity, non-presence of the Hong Kong government. I have been coming consistently, and I'm very pleased to see a big delegation this time. It is, last year we already have a big delegation, but this year is bigger than last year. And for the very reason that Hong Kong needs to get our story out, need to tell people that we are open for business. And yes, there are unrest. Yes, what you see on television, but there is another side of it. As you say, the financial market has done well. Our capital market is still very strong. There has not been any significant outflow of capital. All this point to the fact that people, investors, global investors, still see us as an attractive market. And there are obviously these signs of concern, and we very much hope that the concern can be addressed very soon.
You have a unique insight, given you were on the National People's Congress until very recently. Do you think that Beijing is prepared to be patient with the Hong Kong government and allow it to resolve this situation locally?
I believe that it will, and it should. It's a local issue. Under one country, two system, we should be able to resolve the issues, and the government are beginning to resolve some of the issues already.
Let's just focus back on the exchange. You were an important force behind the bid for the LSE. That obviously didn't succeed, but it feels as though the exchange would like to do some more deals. What can you tell us about what we might see this year from the exchange in terms of further deal making, or perhaps a new direction for the LME business, which you already own? Right.
Well, as I said earlier, we are the second pillar of our strategy is really international connected. And that is in terms of products, in terms of footprint. We are open-minded. We will look at all the possibilities. Beyond that, I can't say very much because one, we are in a closed period ourselves. And secondly, there are all kinds of possibilities. And I would say that we wouldn't rule out anything that come our way or that are interesting to us.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.